live with another edition of the TradingView show with TradeStation. And we've got another great show for you because it builds off of last month's show where we spoke about the upcoming summer trading, what to prepare for, what to think about after all of the tariff volatility. And we're going to dive into what's going on in markets right now to prepare you for the next few months. Now, it is important before I kick this off and hand the mic off to David Russell that this show is sponsored by TradeStation. TradeStation pursues a singular vision to offer the ultimate online trading platform and services for self-directed traders and investors across the equities, equity index options, futures options markets. Equities, equity options, and commodity futures products and services are offered by TradeStation Securities Inc., a member of NYSE, FINRA, CME, and SIPC. David Russell is the global head of market strategy at TradeStation. And as I always say, he runs the TradeStation account on TradingView. You get to read his ideas, get his analysis, get his charts, and then talk to him live here. David, I'll hand it off to you.
Well, thanks, Steph. It's great to see everyone. I'm showing the standardized returns here of some ETFs that we may or may not talk about. I wanted to just kind of share that. And I showed some disclosure before. So it's great to be with everyone. We just went the TradingView, the ideas in TradingView. And, you know, I have been thinking recently, I've been looking at some different patterns on the S&P. And I've been kind of thinking about, you know, whether it would make sense, for example, to be doing, some ideas on this. The problem is it's just so ambiguous right now. I want to kind of point out the kind of pros and cons here to start off with the S&P because, you know, last week I don't have it on this chart, but I did an analysis using TradeStation, and I found that last week was the smallest range from high to low, just a candle on the weekly chart. So the range we had last week was the smallest. I'm going to go here. Look, there's a weekly chart here of the S&P. This was the smallest range since back here in December. At this point, at the beginning of December. So this is something here that is, you know, can be a little bit a sign of energy kind of fading. And I also noticed that the same way you see a tight range on the weekly, we do see a potential kind of rising, you know, wedge here. So there are some things here that might be a little bit kind of potentially marking some tops here. So the levels I'm watching, if we do get some potential downside, would be the June low. And there was a June low on the 2nd of June, which was essentially around kind of 58.61. And then we also have this level. Now, I think last time we might have talked about this. We had talked about a level that was emerging on the S&P that was essentially in here. I think I can't remember when, we've written about this in different ways. We did a TradingView idea on it, but we had this tight range between essentially the level in early February and the level in mid-March. And we did fluctuate in that range for, you know, a fair period of time between about May 12th and about June 3rd. So that was a range here that we hit the top of, came down, held. So now I think if people look, one thing to be looking at potentially is for, you know, if we do have some downside, the level kind of 58.61. And below that, there is also this range down here. So my view here is that there are some decent kind of support levels to the downside if we break. But in the near term, you know, we are looking to kind of hold above that high from May 19th. It's interesting. Last week when we slammed down on Friday, we did hold that support level. So here we are kind of up at the top of the range here. We're kind of in this very tight range. You could actually see in some ways, you could actually say that we have a potential range just right here, essentially from that high on Thursday to the high on Friday that we're now kind of stuck within. And, you know, a breakout to the upside of this is something that people might be looking for. But at the same time, if this resolves to the downside, like I said, people might look for that June low as support or down to that kind of level from it was essentially near the low kind of in late May. So I think it's important to realize here, you look at the market, it's important to remember we have the Fed meeting on Wednesday. And the data has been overall pretty positive, but the Fed has reasons to be kind of cautious. And I think it's just important to realize that if the Fed comes out and gives, something of a hawkish message, sometimes we actually see that marking something of a kind of a top. So that's, I think, a risk that's out there is the Fed meeting. We obviously have the situation in the Middle East that people don't know how that might resolve. So those are just kind of issues that are out there right now. So I want to kind of point that out. We also have a lot of uncertainty about the potential thing in Congress, the spending bill. We have potential in a few weeks of these tariffs on other countries to be kind of kicking back in. So there's a lot of uncertainty that does remain out there. And so it might be a real question of, do we need to have some of those uncertainties removed before we break out to new all-time highs? And if we remain in a period like that, do we simply have something of a summer trading range between kind of 5,800 and maybe 60, 50-ish. And so that's kind of my overall view the S&P here.
Well, David, I have to say that builds off so perfectly of our show last month, because you had told everyone, you might see a little bit of boring action. I thought that was, looking at the chart now, I'm like, it's showing us that right there, especially as we hit the summer months. You do bring up two very interesting events. This is why we have David Russell and TradeStation on the show, which is, you just brought up the Federal Reserve meeting, and then the sort of the tensions in overseas in the Middle East. What's sort of your view on the bigger impact that traders should be thinking about? Is it both of them? Is there a specific symbol that they could watch maybe for, a tell of sorts, maybe energy, oil, interest rates? Maybe walk us through those two big events that are coming up and happening.
I think it's a good idea to watch oil. There's various ways to watch it, but watching it with some kind of real-time price quotes, whether it's an ETF that follows it or the futures or some of the other things. Different people have access to different symbols, but having a real-time monitor of oil is, I think, important right now, because that's what's going to move first. I think there's really no way to kind of, anticipate how something like this will end up. We really haven't seen anything like this in our lifetimes in some ways. There have been issues in the Middle East, but this sort of thing is a little bit more of a kind of potentially risky thing. So I'm of the view here that there's a lot of, potential kind of risk, and we're at the top of a range. And for me, overall, when I look at when you're in a range, you have to kind of look. And then one thing I'll point out as an example of this, we did one of our webinars. We had actually looked at the XLE, the energy ETF, and it was down around this level. And early last week, we told people, well, bad geopolitical news is not priced in. And so we actually were saying there was some potential here for things to go from being calm to being kind of worrisome. And so we had that upside in the energy ETF. And that's more or less what we told people a week ago in our State of the Market webinar, which is on Monday afternoons. So basically, now flip that same concept around to the S&P. We're at the top of a range, and we're not pricing in bad news. So we're at the bottom of a range. Now for energy, unfortunately, good news is bad news in the world. But the thing is that energy was down, and the bullish news in energy had not been priced in. And then it happened, and then we had upside. Now we're at the top of the range, and the bearish news in the S&P, we're at the top of the range, and bearish news is not priced in. So one of the things I just kind of find philosophically, when you're in a range, you kind of realize the news pendulum can swing. And that's often what happens in a range. You get to the top or the bottom of it, and sentiment reaches a certain extreme in one direction. And, from my perspective here, we're in a spot where sentiment here is pretty bullish. We had the good Oracle earnings last week. We have an upgrade today of Advanced Micro Devices that's helping the chip stocks. So those things are kind of putting some positivity back in. But if people do have a sense of things going the other way, we are at a spot where we did not clear last week's high. We're making a lower high. We have the potential wedge breakdown. And this could be something where it's not like clearly bearish, but it is the sort of thing that is the kind of the beginning of what a kind of top might look like. Now, speaking of a top, I want to show, I made a special chart using TradeStation. You could do this on TradingView, but it was easier for me to do this real quick. This is basically the S&P. These are indicators, studies, lower studies of the S&P, but I actually hid the S&P. And I just wanted to show, it's like on TradingView, you can do that too. You can, if you're looking at something with a lower oscillator, I don't have anything right here handy, but you can only show the lower oscillator. So I essentially did that. Now, the key point is these are all S&P basically showing, you can see here's the beginning of May. So what's interesting is the advanced decline line made a lower high. MACD has been stalling. While there's relative strength, made a lower high, and the rate of change has made a lower high. So these are just showing some potential divergences on the S&P 500, even as it was kind of poking up toward these kind of recent highs. So for me, I wanted to kind of point that out, that we're getting divergences and we are getting a tight range with the potential of a kind of breaking to the downside. And we're near the top of these other highs. So from my view here, just with a lot of potential for the news pendulum to swing the other way. And it might not be the Middle East. It could just be, oh yeah, the Fed's not eager to cut interest rates. Well, that right there could be enough. I mean, the hawkish Fed meetings and hawkish Fed dot plots have often been the catalyst for downside in the market. So that's something that could simply come into effect and be the catalyst. But I think the key thing is when you're at the top of a range and everyone is positive, or if you're at the bottom of a range and everyone is negative, sometimes looking for the news pendulum to swing the other way, the sentiment pendulum to swing the other way is, something that can make sense.
I think about that a lot, like a scale of sorts, where like if the scale is just too heavy on one side, it needs to find equilibrium. And that comment about the range with the news, whether it's the top or the bottom, is quite interesting, because even you showing us this chart, I wanted to ask you this because I still can't believe it. Those giant red candles there from April, that was that tariff, everybody thought the world was ending. Things were just crashing. You and I were talking before the show about some stocks that are even up a ton since those lows. And I just have to ask you, because I feel like everyone's moved on from this so quickly. Are you surprised at all by the speed of that recovery? Or does it sort of strike you as sort of, actually that was just everyone sort of getting to that one side of the scale too heavily, so panic was in the air and it was ripe to be sort of taken advantage of?
I'm not surprised by the violence of the rebound, because I think they did retreat pretty aggressively. I also think that a lot of people got very bearish very quickly, and there seems to be a huge amount of short interest overall in the market. So I'm not overly surprised by it, but also I'm going to put this marker in here. I wanted to just add that. So there's a weekly high where we did kind of peak, but overall, I think that it's something that you have to just think about how people are positioned. And I think that people got extremely bearish to the downside. And there was a lot of concern about tariffs coming in. It did play out. And it was something where if they had not done more or less a 180, it would be hard to justify the S&P, having, much of a rebound at all. So I think you have to realize the market has priced in a real reversal of the sentiment. So I think overall the market has been in a long-term uptrend. So seeing a violent rebound from a violent drop is not a huge surprise, especially when it was not something like a clear recession. It was kind of like a discretionary crisis. It was a man-made event, not something like a recession, which is more like a natural disaster. So, if the White House can cause a crisis, they can just as easily take it away. And I think the market is more or less assuming that that's what's going to happen. And I also think that there is the expectation that we're going to see things like the deregulation and IPOs and things like that this year, which could create more of a positive sentiment environment. The other thing I think is important to realize is that there's, when we entered this year, we were looking for double-digit earnings growth. And one of the reasons is because, there is this AI boom. But on top of that, there are reasons to be positive about inflation. We are seeing a real decline in home prices in most of the United States. We really could see shelter costs, which is over a third of the CPI, continue to drop for the rest of the year. And, seeing inflation go back down closer to 2% is not crazy to think. So there are a lot of reasons to be positive overall. And I think that once the absolute kind of pain was removed, that was something that it's not a surprise we saw a rebound of that type. But a lot of that rebound has now happened, and now we have other risks out there, like, for example, this situation with energy prices, which could add another sort of hawkish narrative. So first tariffs came along and caused inflationary fear. Now we have energy causing inflationary fear. So I think those things together are something where it does create the potential for something of a range to form until more of this stuff is resolved.
Well, I want to just say to energy, another note I had taken down before we started this chat was, by the way, for those who follow the show, last month we spoke about energy as well. If you recall, we were speaking about sort of like it's one of the least weighted sectors in the S&P 500. And I just want to just mention that as another reminder of these monthly shows can really help you get prepared for what's to come in markets. And changing gears here a little, David, I believe you have some individual names you wanted to show us as well as sort of, some interesting moments in markets or interesting equity names. You want to start those?
Yeah, let's take a look at the 10-year first. So I do think it's important just to realize here that the 10-year, is continuing on the weekly chart here to make these higher lows. And I think we have to just kind of bear this in mind, because overall, my biggest concern here is that the 10-year is not really showing signs. The yield is not showing signs of backing down. And there does seem to be a secular shift now away from American treasuries by international investors. We have a lot of supply coming to the market. And if there's any reason for me to be more kind of concerned overall about equities over the longer term, it is this chart. And it's not giving a whole lot of comfort yet. We're holding above this 432 level, and we're really in a range now between kind of 4.5 and 4.25 on the 10-year treasury yield. I think people might want to think about having some alerts up in this range. We went up to this. We had identified a range between 460 and 465 as the initial kind of resistance, and that was resistance. And when that peak happened, stocks actually rebounded, and this moves opposite of stocks right now. And so essentially, I think we are in a risk here of basically, if you look back in the summer of 2023, this thing just snuck to the upside and the market basically sold off. And I think we have to be careful of that, because we are continuing to see on the weekly chart here higher weekly lows. And I don't see much that gives me a sense that we're going to see this reverse to the downside. So from my view, the thing to be thinking about now is, it is kind of a flipping around, but is to be thinking about downside in the Russell and then small caps. So I think right here, a rebound, a sharp rebound in the in treasury yields, a significant upside of treasury yields, especially the Fed meeting and stuff like that, could really punish the Russell. It's interesting to look at the Russell here and to see how basically it is stalling below this level from January. Every other index, look at the S&P. Let's just look at that level from mid-January. This is the same level on the S&P. It's right here, and basically we're above it. The NASDAQ also is above that same level. That's its low from mid-January. We're above it. The Dow is slightly above it. That's that level, respectively. But on the Russell, we're stuck below it. So like I've said, the technicals can do a good job of giving you fundamental information. And this is telling you here that, the Russell is struggling. And I think that's an important technical point here, that if we do see some downside, this is a place where the bears might come first. And for people looking for some downside, this might be the clearest opportunity if we do see something like, yields moving higher. And again, let's just not forget Fed meeting on Wednesday. If there's going to be a trigger for something like that, Wednesday, 2 p.m. could be, the kind of the moment to watch.
Love that reminder about 2 p.m. Wednesday. So mark your calendars, everyone, for that specific date. David, going back to that 10-year treasury chart that you had up as well, just curious if you can just walk us through those, some of the key levels that you had mapped out on that chart. I'd love to hear. Yeah, so that's so interesting. You got the June 2008 high there. We still haven't gotten to the 2006, 2007 high.
No.
But the October 2023, wow. So that's so interesting. Considering how bad inflation was, we still have not eclipsed that October 2023 high. So those are some really nice levels. Maybe if you just want to explain to everyone how you're marking down those historical measurements and for what reason.
Well, I noticed in June, if we go back on the longer term chart here, I actually drew this line here for simplicity's sake. But if we go back to like the monthly chart, and you look way back here, this was basically June of 2008. So, I mean, this line, I drew it from there. For some reason, at one point, I wanted to make it more clear, so I didn't draw it all the way. But this goes to June of 2008. So we need to look back and think about what was happening in something like June 2008. And essentially, this was a time when, right here. So basically, we had the first kind of waves of the credit blow up happening. And this is that spot right here when basically we kind of peaked, and then the real kind of problem started. This is like the sell-off of 2008. So this is just a couple of months before the big crash of 2008. And you can basically see that lower highs consistently happen throughout this time. And then we get into the Obama years and the Fed being at more or less 0%, and this long period of time of yield just continuing lower. And then we have that COVID crash. And then you can actually see, now this is the trend that began a long time. So from my view here, and I can actually just make this a little more clear if I do it like, something like this, basically. Line's not exactly right, but it's around 4.32 is really the key level. So anyway, that level now, I noticed that as we went up, and you go back here on the weekly chart, essentially to this point in October of 2022, this was the bottom. This was basically when the market bottomed in in 2022. The S&P bottomed and the yield peaked. And as the yields dropped, this was when the market rebounded in late 2022 and into 2023. And then basically you had the summer of 23 with yields running up and the market crashing. And then you had a peak here in October of 2023. And that's when the market went on its rally and broke out to new all-time highs that took it over 6,000. That was this level from here. So what's interesting is we continue to see higher lows across this entire time frame. And so I think that when you look at this long-term trend, the downtrend that's broken, and then the fact that I'm going to do a maybe 2-week chart to make this more clear. It's when you're working with things at this time frame, you got to kind of look, but you'll notice that there's really long downtrend, and then you see we break above it, and now we're making higher lows above it. This is, to me, something that does suggest that yields here, when you consider the supply coming and you consider a lot of other factors, this gives me the sense here that we could actually see, the trend seems to be pointing higher in yields here, and that is simply a risk. So to me, what was important was let me go back to the week. So I keep jumping around here. All right, going back to the reason why this level mattered to me was October of 2022. That we could see that it went back to June of 2008. And then basically we've chopped on either side of that line. But the thing is, if that's resistance and then it becomes support, well, that tells you something. So, in many ways, if you look at these other points also, if you look at the point where we held the low in March of 23, it was actually the high of 2018. So you can see, support became resistance. And now we could be at a spot where, you can see, all right, first of all, it was resistance here in June of 22. So it was resistance. It stayed resistance. Then it became support. This is what it looks like when things are breaking a downtrend. It hits resistance, it stalls, then it breaks resistance, and it turns into support. That's what it did there. It stalled, then it broke, then it held. And now we would go up. We stalled. We stalled at that high from 2008. Then we broke it in October of 23. Now we're chopping on either side of it, and now we are potentially turning it into support. So from my view here, this is telling us that there is potentially, more upside in the TNX, which would mean downside in bond yields. And based on historical patterns, would probably be bad news for the Russell. Historically, the Russell would not do well in this environment.
Well, I just want to say that chart is a work of art, especially with that June 2008 high coming right into play right now. And if I think I'm looking at that correctly, it looks like it's bounced off it the last, you're on a weekly chart. So the last 4 weeks, those wicks there. And for those who aren't aware of this, this is TNX, symbol TNX, 10-year treasury note. And David just gave you a masterclass on why you potentially should be charting this and watching this. It is the risk-free asset. It's a trade-off between all other assets. And that is a very interesting level if you want to mark that down yourself because you're watching this show, that June 2008 high. And one more note for those who aren't familiar, 2008, 2009 is the biggest financial crisis of our time. So you're sort of getting a sense of, what investor emotion was like when you see those types of highs or lows during that time. So great chart, David, I must say. And if there's anything else you want to add to it, please do. Or if you want to get to, I just remembered the leap too. We haven't even spoken about.
All right, let me check. Well, I'll just quickly say on this, setting an alert at 4.5. If we close above 4.5, that was essentially the high back. It was basically a closing high, and we kind of couldn't really get consistently above it. We probed it intraday, but we're in a range of between 425 and 450 on this thing, and that's a pretty tight range. And when you look at the longer term, higher lows, if this does break to the upside here, there could potentially be, when something bases and consolidates here now for a period of it's hard to believe it's almost 3 years that this thing has been chopping on either side of 4.3. It goes back to October of 2022. A long period of consolidation. This could actually see, look back here, consolidated for about a year and then it extended. So, this could see a move over 5 if that happens. And I think people need to just realize if that happens, that could be the unexpected thing that comes and bites us if you're bullish on equities. And again, something like this can be true for months and months and months before it actually happens. This is not, in my view, a reason to be bearish on stocks now. But if we start closing above 4.5, we start closing even up here above 4.8, it could be very difficult for stocks to continue higher. That's exactly what happened. We look back at the summer of 23. Things felt wonderful. Everyone was very bullish. And then yields started running. And then the market pretty much went into a 2 to 3 month period of minor correction or minor consolidation, but it was a few ugly months as the yields moved higher. And if that happens again, we should keep it on our radar.
Well, great chart. And I think the way you started that with set an alert at 4.5, I'll be doing that right after this show. I'm going to go create my alert at 4.5. So if anyone else is, wanting to do that, great way to stay in touch with the show. And we can even discuss that on the show next month. Now, David has got the Leap open right now, which, as you know, or many of you know or are just learning, this is our risk-free trading contest, meaning it is a paper trading contest. It's a virtual environment. It's like a video game. You log in, you play with all of the other people on TradingView. As you can see here, almost 55,000 traders are registered. I also should say this one's pretty special because it ties into the show as well because it's sponsored by TradeStation. So they are supporting this Leap. And that means that there's prizes for the winners, the best traders, and there's also free TradingView plans as well. And when I say prizes, you can actually win like actual cash if you come in first. So if you trade for this full month in a really great way, better than everyone else, you use your risk management, you make some calculated trades, you outperform the other 54,000 traders, you're going to get a chance to win some actual cash just for paper trading. So this is this month's Leap, sponsored by TradeStation. And David, actually, if you scroll down, I would love to show all of the viewers the symbols, because I think this is an interesting one. Let's see, there they are. So as you can see here, it says symbols for trading. This is important. TradeStation and TradingView have given you this basket of symbols to trade. So you can trade any of these symbols in the contest, and you just load them up on the TradingView chart, type in the symbol name, and you're off to the races once you join this contest. So very, very fantastic and generous offering from TradeStation. And yeah, it's virtual, risk-free. Go practice, take some of your learnings, things maybe that you've learned on this show, and see if you can beat everyone else and win cash as well. So David, I just wanted to shout that out. Thanks for sharing your screen here. And if you want, we can hop to all of the other charts that you have prepared for us.
Yeah. Well, one of them I want to just mention, in this kind of environment, I call this essentially a stock picker's market. Very quickly, look at the VIX, for example. The VIX here had a little bit of a bounce last week, but it's really pulled back a lot. And often when you see the market has crashes, you'll go through a period of time when the market will rebound and the VIX will simply bleed lower. And it could bleed lower here for a while. It could just kind of sit down here around 20 or 19 or something. And in that environment, it's been here for a while, you get stock picking. And what I mean by that is the big index moves less, but individual stocks can really give you outperformance. So I was looking for some of those. And one that I did want to point out, we did a TradingView idea on this last week, was Mercado Libre. Now, there's been an interesting trend toward Latin America. And I think that Latin America has underperformed for a long time. And I want to just kind of point out that I think that there has been something of a shift toward it. There's been an overall shift this year toward global assets. And I think that this is an interesting sort of name, MELI. You can actually see how it you can draw this line in a few different places. You can kind of see, I like to go back to the more recent level, but you can see we had a high here from February. We had this high here from May. We gapped higher on earnings, pulled back and held. And this stock is actually breaking out to new all-time highs. So I think this is actually one that jumped out for me. And these are some of the names that are kind of catching my attention here. Now, we did this. I'm trying to remember how I found it on TradeStation. I think I found a stock that has recently hit a 52-week high that had pulled back a lot in a trailing 5 or 10 candle period. I think that's how I did it. But I have a different alert that I use on TradeStation. A lot of these ideas come from that. What I essentially am doing is I'm looking for signs of intermediate term bullishness and short-term weakness. And I'm simply looking for rallies and pullbacks using some of those kind of methods. Another one on that list that popped up for me is this kind of lesser known company, but PODD, Insulet. It's actually a diabetes company. They do some diabetes testings and treatment and stuff. Bullish gap, also in a strong earnings report, pulls back and holds. Interesting to kind of see these big candles and then look at the inside candle, inside. I think I can actually show here. Look at inside bars. You can see inside bar, inside bar. So this had some very textbook sort of patterns on it of the pullback. It reached an oversold condition there. And then basically it had the 52-week high, went down to an oversold condition, formed two inside candles. And now there's some possibility of this having some continuation to the upside. Now, these might not be the most interesting or exciting stocks right now, but I think we're in a spot where we are seeing that this is a kind of stock picking market. Now, I'll just notice if you look at some of the ones recently, things like Micron, I mean, this has had a tremendous run, but it's interesting also to see that if you look at a name like this, it had a strong rally and it basically went down and hit its low. And this is essentially the sort of patterns that you'll see. You'll see a thrust, you'll see some kind of consolidation, some kind of short-term weakness, and then continuation. And, you know, a lot of the scans I do would have detected a name like Micron. Now, it had not hit a 52-week high, but it was one that had kind of done this sort of thing when you have short-term strength, pullback. And, you know, these are some of the things overall. And I'm just looking for patterns here. You're seeing a rally, continue, you know, consolidation, and then continuation. And that's a lot of what I'm looking for. I look, how do I find a rally? I look for things like a short-term move. I look for things like a 52-week high. I look for things like the fact that the 8-day moving average is above the 21-day. And now look for things where the 8-day is above the 21-day, but the last is under the 8-day, for example. And that would essentially show you that it had a pullback within the context of an uptrend. So I'm always scanning for these different ideas, and these are some of the ones that have come up recently. But the two that right now kind of immediately grabbed my attention were Melly and PODD. And then another one was it's crazy stock, but Build-A-Bear Workshop. This stock had this big kind of rally on earnings. And it's interesting to kind of see here. I mean, it's a little bit overbought at this time, but this is also a name where it's had some interesting sort of turnaround action in it. And these are the kind of names in this environment that have been kind of working. They're kind of idiosyncratic, individual names. And this is what you'd expect when the volatility goes down.
Well, very nice tie-in back to the chart of the VIX. And I want to ask you a few questions about the chart that you were showing us with Melly. And then I also definitely want to talk about Build-A-Bear as well. But first with Melly, that uptrend is beautiful. And so that green line there, how are you visualizing that uptrend? Is that a 200-day moving average? Yes. Or what are we looking at there?
It's a 200-day moving average. So essentially we have, a longer term uptrend. This was when the market crashed on tariff news. And there's a pattern, you and I were talking about Palantir before, but there's a pattern we've seen. In some ways, this is similar to Palantir. What do I mean by that? Well, look at Mercado Libre. When the market crash happened, it stayed above its basically like its Christmas time lows. Look at Palantir. When the market crashed, it basically stayed above its January lows. So you can see the overall market went way below their lows from January and December, but Palantir did not. Mercado Libre did not. Another one we did a TradingView idea on, CrowdStrike, also did not. We did a TradingView idea explicitly mentioning how it held. Basically, it was holding. Well, actually, this one did pull back a little bit more, but we had noticed how it was holding. You know what? I'm trying to remember how we did this one. Maybe it was it Okta? I'm trying to remember. I think we did Okta. Yeah, it was over here. This was like the pit of everyone's negativity. This basically pulled back in April to where it was only 2 months before. The market was back to like 52-week lows, and Okta was at a 2-month low. And then look at how it basically performed coming out of that. It had a bad earnings report, but the key thing is, well, actually, it wasn't even a bad report. It was just it had a lot of positives. It was, it had really run and they sold the news. But basically the point is this pattern, even though it might not look the same, if you think about things based on time frames, the market was getting hammered and this thing was holding a 2-month low. Look at something like Mercado Libre. The market was getting hammered and this thing was holding like a 3 or 4 month low. The S&P was hitting a 12-month low or something like that. And that's really how I view these things. So for me, this is really what tells you that long-term uptrend was very robust in this name. And then that's essentially, you can see how the 200 moving average is rising across here, just like this, like a drum beat, like the bass line in a song or something, just keeping the whole thing going. That's essentially what you're seeing with this, with the 200 moving average is telling us. And then, of course, we have the signal that I detected or that my scans detected was the recent high and then the I think it was at that point a 5-day drop.
Well, I want to say to the point of these charts, taking us back to the commentary about the tariff sell-off, just how intense that was, then how fast the snapback is. I just want to put some of these charts into perspective for everyone. These moves are 50% plus moves, in some cases 100% plus moves happening basically since the tariff crash happened in April. And these are multi-billion-dollar stocks. In the case of Palantir, I think it's over 300 billion today. So we're talking about a 150 billion, 100 billion market cap increase in about 3 months. So like just like remarkable stuff unfolding since that tariff wipeout. And I really like the 200-day moving average that David has on these charts, I must say, because to his point, you kind of have the drum beat, it keeps things smoothed out, and you can just see how quickly it just like it snapped back upward from those lows. So really, really nice charts. Anything else that you're watching or publishing from the TradeStation account?
This is a more kind of idiosyncratic name, but for people looking for sort of things that are more kind of dramatic, this company, Northern Dynasty Minerals, this was one that's a gold miner, but also has a similar sort of pattern where it basically hit a high and pulled back. And this is one I just noticed, but I'm just literally scanning for these things all the time. And I wanted to just mention this because this seems to have some relatively new news of things getting better in its business. And it's funny, I've been coding. I don't know if you could hear that voice, but I've actually been coding an AI that will talk to me about the market. It's something I've been kind of developing. I don't know if you could hear that, but there's some interesting things you can do with that. Regardless, the key thing with this is that it was essentially, this is one that popped up my scans as well. And essentially what it did was it had pulled back under the 8-day exponential after hitting a 52-week high. NAK, it's a small, more kind of speculative name. But in this kind of market with the volatility low, this is when people start to look for some of those kind of small names that might give outsized moves. Another thing I'm watching, I have to mention here, is the Australian dollar. The Australian dollar is, it's an interesting sort of pattern that's developing here. And, after the Fed meeting, I mean, I'm not going to try and really say too much about what the Fed might do. I mean, it's really kind of, it's hard to really anticipate because in some ways, if you look back to September, the Fed cut rates and the 10-year yields moved. In other environments, the Fed has been hawkish and the dollar's weakened. So I'm finding it difficult to really make clear sort of statements about how the market will react in the normal sort of ways you would expect. But all I'll mention here is that the Australian dollar basically had this big false breakdown in early January or in early April, and it's been grinding higher since. And I'm looking to see if this can turn into some kind of bigger uptrend. I don't really know what to think about it, but I do know the dollar's been weak. I do know that certain metals have been moving higher, and I do know there's been a shift toward global assets. And I'm just watching this. I'm not really sure what to make of it yet, but there's a part of me that looks at long-term trends, and I believe that something here like the Australian dollar could be at a point where it is essentially kind of has had this long downtrend, and it could be at a spot here where where there's simply not a lot of sellers left in it. And it might be at a spot when it does have the potential to work its way back up this longer term sort of range. So I think this is one just to watch. Another name is Coinbase. It's interesting here to look at Coinbase. Which chart do I want to use? I think I want to use this one. So I have too many charts, but Coinbase here.
We all do, David. We all do.
I put patterns on some. I put markups on some, and then I'm trying to remember which one I'm using for what. But the thing about this is that essentially this is also in a kind of tight range here. Coinbase, which is the ticker is Coin, and wait, where's the rectangle? But essentially here you have a range in this that is pretty tight, and this might actually look at this chart now. Look at Micron. So I want to just kind of mention that.
Wow, they look almost identical.
Yeah, I mean, that's kind of what I'm thinking in something like Coinbase here. You can see that the 8 days above the 21-day, you can even potentially, one of the things that I noticed about Micron, I mean, it's not exactly the same, but you kind of have, I'm trying to think of these patterns are not all exactly the same, but look at Micron. You basically had this trend line here. Wait a second. I had these old markups on here, but look at this. We take this off and we just look at this trend line here. You could see essentially it had this trend line that it broke through on this shorter term pattern. So a lot of these are things that have come off the lows, they hit resistance, they pay their dues for 2 to 3 weeks, and then you get continuation. So I just say that Coinbase is one that we might want to think of in that same sort of universe. Another one that to me was a little bit more problematic is CDNS, which is Cadence Design Systems. It's a semiconductor software company that there was some stuff that the administration had done to restrict Chinese access to it. And for me, it's kind of interesting to see that this is actually something here that might have a fair bit of risk in it. It's kind of stuck, and it has some overall geopolitical risk. And so I wanted to just kind of mention that this is one that is potentially setting up with a lower high on more of a long-term sort of weekly pattern here after this drop. This is one that people might actually see some kind of longer-term topping. This stock's had a great run for a long time, but it might be in a spot here when there's some potential for it to move back down toward 250.
Well, I want to say on that note that this is another reason why I think this show is quite important. Cadence Design Systems. I personally I've never looked at that stock before. So that is what we want. Idea generation, new companies. I will check this out just because I like to think I've heard of like everything in markets by now. Nope, I've never charted Cadence Design Systems. Going back to the Micron chart, I just want to comment on that quick. I would not be surprised if someone watching this show is a long-term follower of Micron, because it was sort of it was almost considered like the most obvious AI name because they do so much storage and they make the drives to help with a lot of the immense storage that's coming with AI. I mean, I just want to comment on this. Is that chart to me is remarkable because the highs from about that August, your first white arrow, it just went nowhere for so long. And it's almost like it took the tariff sell-off to wipe everyone out to actually give it like that ability to then sky. It was like, there's no more supply left. They all just like left. That is remarkable. I've seen this chart in my feeds. I've seen people talk about it for the longest time. I'm just so blown away that it actually made the move that people have been calling for now for such a long time. But the market will do that. It'll just grind you down until you get wiped out, and then it'll take off without you.
Yep, and I would say I call this my own informal lingo. I sometimes call this a whip around. When something you believe in it and you're bullish, but it's neutral. And then it often will give you that final washout, which is the false move. And what I've often noticed, and I'll admit sometimes I've been stopped out by moves like this. I'm like, I like this stock, I'm bullish or something. I'm not talking about Micron itself, but I might like it for whatever reason. And then it's neutral. It's stuck under a 200-day or something like that. And then it gives you that big washout, and then it rallies. And that's a pattern people often see. And I would just say it's important to kind of realize if something is short-term or intermediate-term neutral, that often can turn into, one last bit of pain before it does want to move. So I want to actually point out, I'm noticing this on this stock now. There's a high at 123.03 from back here last summer.
Oh, there's a gap there too.
Yeah, I'm just noticing that. People looking for a top might be eyeing this level. I'm not sure what caused it. There was a series of headlines last summer when Biden was cracking down on chips and the Chinese, buying of chips and all that stuff. There was a series of gaps here, but I want to just kind of point that out that Micron has more or less doubled off its low. It was down in the low 60s, and now it's like around 120. So it's almost doubled from its low. So people looking to ring the register might actually be watching that level.
Another example of a stock that has doubled since the tariff sell-off. I'm just like, and by the way, this is a $100+ billion market cap company. This isn't just like, quick double. It's a small cap. This is a large company. And so the money that found its way into some of these names is just, I'm still trying to process it in some regard. So, but yeah, that Micron chart, what'd you call it, David? The whip around, or what was your lingo for it?
I kind of call this a whip around myself, because I've noticed this when if you're bullish on something and it's neutral, it will often give you a puke to the downside and then rally. And the same thing if you're bearish on something and you're early, that's often happens. Something, you believe something, and you're early without confirmation. You'll often get that kind of final false move against you. And I've just noticed it. It's happened to me many times. I've seen it many times. It's why I try and let something happen, like the confirmation, where people say things like letting that short-term confirmation happen, like the 8-day cross above the 21-day or something like that. There was probably a MACD cross somewhere in the same kind of ballpark as well. So I want to just kind of point that out. It's one of these things that It's important to think in different time frames between things being, short term, intermediate term, or longer term, bullish and bearish. In fact, I'll just go quickly to my trading view idea today, which was Apple. We had kind of identified here the fact that, the intermediate term trend here is kind of bearish. And you can also see that the 8-day is trotting back under the 21-day. So this is something you're making these lower highs. I want to just kind of point out, now this might kind of hold and squeeze up, but the pieces on this are kind of lining up more in a kind of negative direction here on Apple. Now, Apple is one of those names when, if it does kind of hold, people might look for it to kind of hold this level. And that's why I think people would want to be waiting for a confirmation of a break under that level from May, the low of May, the May low as a kind of level, and not to get sucked in and try and say, oh, it's going to break, and then it whips up to the upside and then slams down. I mean, something like this might have that squeeze up and then get shorted and then break down. But to look for the kind of confirmation, to close under that low, to kind of be aware of that, because this is like, you can say it's long-term bearish, but it might have some kind of like false action to the upside, and to wait for that confirmation. It's why it can be so important to do that. I pointed that out because this is one where the pieces are potentially lining up, but also like, it is a big name and everyone is now pretty negative on it. So there's probably a lot of people positioned more to the downside in Apple.
We have to talk about that, actually. That is a big one. Apple is the most, what I understand, heavily weighted stock in the S&P 500. It might be NVIDIA now, but it's one of the most heavily weighted stocks in the S&P 500 or NASDAQ 100. And that is interesting that looks so much weaker compared to the charts we just looked at. You were showing Mercado Libre, South America. We were looking at Micron, data storage. We were looking at Palantir. And it's interesting. Meanwhile, Apple looks a little weak. So does that concern you at all? Or do you think it's just a change in market leadership? What's your thinking with Apple in terms of this chart not living up to the expectations of the other charts we just went through?
In my view, it's a change in market leadership. And this is something that, Apple sometimes will struggle as the more risk-on sort of names do well. This is not, to me, necessarily all that damning for the market overall. Like you said, NVIDIA is bigger. And also, Microsoft has been performing very well. So the big three now are kind of Microsoft, Apple, and NVIDIA. Of the big three, two of the three are doing well. And then you have a lot of kind of up-and-comers like Palantir, Oracle, which had a tremendous report last week, Broadcom. So these names have all done pretty well in addition, which kind of like does keep a degree of strength in the large cap growth story. Meta, all these. If it's only Apple that's struggling, it's not the biggest problem. I did actually want to mention that, and I've done a TradingView idea on this one, but this has moved a lot. And I want to just point out, I'm not sure what to make of it now, but about a month ago, we did a TradingView idea on platinum. And I think we did it back here. So I think we did it back here when it basically started rallying. So platinum is, I want to just mention, people want to go back and look at this idea we did about a month ago in late May when this rally happened. And what's interesting about platinum is, if you look at it compared to gold, it used to be more expensive than gold, and now it's like half the price of gold. So if you go back like 15 years ago, platinum was like twice the price of gold, and now it's like half the price or a third of the price of gold. So people who like metals might see the potential for some longer term strength in something like platinum. So I want to just kind of point that out because, gold, you might say here is kind of, it's run a lot and it's not necessarily, all that, near term maybe giving anything. But I think platinum is a name that people might want to look at. And now it has had a run, to be clear. But in the coming weeks and months, people might want to see if it can get above the high from 2021, because this is something that is not heavily traded. It doesn't have a very large market cap, and it does have the potential to kind of squeeze and to maybe be kind of like silver, but even more volatile to the upside. Silver here having closed at the highest level in over a decade. So these are kind of quiet trades in the metal space that have been working pretty well. And if we see more of this kind of continued, strength in gold and this idea of people diversifying away from the US dollar and all of that stuff, things like platinum, like I said, it's moved a lot and I'm not sure what to make of it at this time, but we only talk once a month and I want to put it on people's radar because it has shown some very interesting signs of beginnings of accumulation. And also, when you see something in a long period of neutrality like this, you'll often see you get a violent move it maybe sits at resistance for a few candles and then it breaks out. So when the bullishness starts, it can be pretty quick. And the fact is, there probably are not a lot of entrenched sellers in something like platinum, which may create the potential for it to not pull back very sharply.
Well, I would say on that note, that is also why you follow the TradeStation account on TradingView, because I'm looking at the idea from May 21st, and the title that you wrote is Platinum May Be Coming to Life. So quite the title there for that kind of chart. And that is also why I think this show is so fantastic. Again, just because of this element that you can read David's research, see his charts, and then we come on the live show and we can talk about it and go through it and see what happened. And yeah, that was a nice research piece, I must say. I'm looking at it now. And I did not know either the historical relevance of platinum relative to gold. That's so interesting that it was at one point twice as much as gold. But now, you know what's so interesting? I just feel like it just doesn't have the marketing that gold has at this point, if that makes sense. I just don't see people talking about platinum prices. They're not rapping about platinum anymore. There's no more like platinum in the mainstream or in the headlines. I feel like gold has really just taken that sort of like, top tier metal status.
Well, it might be like an altcoin season, except an alt metal season.
Metal season. I could see that getting really catchy, I have to say.
Gold, if you think about gold, how Bitcoin would tend to run. And then when you get into that series of Bitcoin making new all-time highs, then you would see the altcoins coming to life. Now, I don't know what to think about Bitcoin here right now. I mean, I don't even really follow it that much anymore. But the point is that Bitcoin hits new highs and then the altcoins follow. And if you go back to 2010, 2011, gold hit new highs and then silver followed. I'm not sure if platinum did, but silver did follow. So what happens, and this happens in markets overall, when one asset runs, then people start looking for things to play catch up. And in some ways, that could be what we're seeing. And like some of these names, like I mentioned, NAK or something like that, these also kind of show that. I want to also just end, if I can, with one or two really quick sort of things with what was I going to show? These retail names. So I mentioned Build-A-Bear, but also Urban Outfitters broke out to a new all-time high, and it's been holding, goes down, touches the 21-day exponential moving average. And then another name that continues to be strong is Darden, DRI. We did a TradingView idea on it, I think back here in January when it was breaking out. Now, it is extended here, but this is just a name that seems to be in a secular uptrend. And if you look at it on the longer-term chart, let's look at that in the weekly here of this name. I think it actually, it basically, it has, well, back when we wrote about it, it was breaking out to new all-time highs. But a name like this, if you look at the way sometimes a name like this will perform, it could just have a good year. Sometimes what happens with a stock like this is it will break out and it will run for like about a year. It's interesting to look back at a name like GoDaddy. We wrote about this way back when this breakout happened, and that was in like basically November of 23, and it basically ran until December of 24. So you had like a 12-month rally out of a long basing period when it basically broke out and ran. Look at FICO. It did the same thing a few years ago. It broke out in November of 22, and it basically ran for about 2 years straight. And if you look here at DRI is just now starting to kind of extend. So I want to just point that out. I mean, it's like Olive Garden and stuff, but a breakout to breakout. So I want to kind of point that out, that this seems to be in that period of running here. So even if you're worried about the economy and stuff like that, there is a select set of these consumer discretionary names like Urban Outfitters, Build-A-Bear Workshop, and Darden Restaurants that seem to be showing some kind of positive price action.
David, I remember when you published that idea about Darden Restaurants, because we spoke about it on the show, I think the January edition. And it's so interesting that you just pulled that chart up again, because when we looked at it during that time, we were making the joke, like when Olive Garden is at all-time highs, what's that say about the economy? Like that, I mean, I don't know, that just seems kind of bullish if everyone's eating out at Olive Garden all the time. And at the time I was thinking to myself internally, like that all-time high looks a little stretched. Now here we are in June, several months later, it does it again. And now I can barely even spot that previous all-time high. So pretty remarkable that Olive Garden is moving like that. And Urban Outfitters, Wow.
That's the
I
point.
remember when
Urban
I was,
Outfitter.
in high school. Yeah, I mean, that's so interesting. Urban Outfitters was a hit when I was in high school, and now here it is. It's back to all-time.
Hitting all-time highs. So here it is, hitting all-time highs when it shouldn't be, right? Oh, it shouldn't be going up. The economy's terrible, tariff, blah, blah, blah. Well, guess what? The chart is telling you something different. And I think that's one of the key things here. And we talked about this way back at a certain time. The chart knew more about Tesla than you know the financials were saying or the earnings were saying. And the same thing here. The charts see these things. And if you really want to dig in, there is a fundamental reason why Darden's been doing so well. They did some kind of turnaround with their business that somehow improved the fundamentals. And I can't even remember exactly what it was. The key point is the chart will tell you these things and the chart will do the research for you. And that's why we love looking at them here.
Well said. And actually, a pretty fantastic way to wrap up the show here with 3 minutes into the close. So with that being said, I always like to give David the microphone for the last word because he, you know, as you spoke about in the show, there's some events coming up this week. We're in June. We're getting ready for summer trading. Also, I just want to add one more time, follow the TradeStation account on TradingView. We've dropped a link in the chat and in the description, so make sure you follow them. And David, maybe as a parting note to everyone, if there's anything for them to keep in mind, to watch as we go into the rest of the month and until our next show in July, maybe, speak your mind.
Well, I just think right now we have this kind of event risk, which is a potential problem for the overall market. And I do think that it doesn't, when I say it's a problem, it doesn't mean we're going to go down a lot, but we might need to see some real resolution of things like the tax bill, the tariffs. And also right now, the market is just assuming the situation in the Middle East is going to go away. And, you know, may happen, it may not. There is a period of time, though, when the market might say, wait a second, this is getting worse. So just because the market's initial reaction is to ignore it doesn't mean that it really isn't a problem. Often, if you look at crises when they first spread, the market drops, it rebounds, everyone thinks it's fine, and then it comes in again. If you look back at tariffs, it was the same way. You know, when they first started coming up, people thought, oh, it's going to be limited, and then it wasn't. So I would just point that out is don't be too confident that the initial reaction to the geopolitical situation is the correct one, because I'm not saying that things get worse, but the market in many ways is a Pavlovian. It's like Pavlov's dog on this, just the condition to buy the pullback. And it doesn't necessarily mean that this time will be like the others, or that it's necessarily, it could just get worse for a period of time and then get better. It maybe instead of being bad for a day or two, it has to be bad for a month or two, and then it gets better. So just to realize is we're not even a week into the situation, and there could be more kind of follow through before we're actually at a spot when we can say it's a good time to necessarily be bullish. So I think there are issues out there that could kind of be problematic. And when you're near highs and kind of stuck in a range, just to be aware that those might kind of bite you and drive you back down to range. And that's why I was pointing to those levels from one last really fast look at the chart here, just to show the levels I was looking at essentially were this weekly low back here, the monthly low from June 2nd, and then also essentially the weekly low back here in late May. Those are the two levels I was looking at as first support. I don't have them on this chart, but that basically was what I wanted to show on this chart. This low on this first one between this shaded area, those are the levels I'm watching as potential support in case we do get something of a drop.
Well, I'll say on that note, great parting note for everyone on the show. And until our next show, everyone, please make sure that you follow TradeStation. Make sure you subscribe to this channel so you can catch our next live show where we can review everything we discussed and share more insights with you all. And thank you so much for watching. We'll see you next show. David, thanks as always for being here. And to all the traders and investors out there who are tuning in, hopefully some of these insights you can take back to your charts and your research, and even the alert, for example, on TNX. I thought that was pretty cool at 4.5. I'm doing that right after this show. So thank you so much, David, and we'll see you next month.
Thank you, Steph. See you next month.